A comprehensive discussion on the Nifty index. Is it time to book profit or there is more steam left? US market outlook, insights on dollar index, gold, and silver. This is our agenda today. Hello, everyone. Welcome to Midweek with Indiacharts. This is Shilpa Raidas, and I welcome you, Jay Vora, the senior analyst with Indiacharts and Stripe. How are you doing, Jay?
I'm fine. How are you?
I'm doing very good, Jay, and I'm very excited to hear your insights today. Jay, beginning with what, according to you, is the outlook for the US markets right now? Is there a case of correction there, or is the uptrend likely to continue? Also, please tell us what about the dollar index, gold, and silver, Jay?
So yeah, I mean in US markets, many are complaining for the narrow breadth. Well, that might be the case, but the fact is that there is no reversal on the price action, especially for S&P 500, Nasdaq, and all. So there might be some intermarket divergence that we would be seeing, but as long as the strong indices are not weakening, that that is where you might have to be. I mean, we might have to chase the momentum, basically, as simple as that. So I'll quickly share the screen. So I mean, there is not much to add from what we had interacted previously.
Last week.
So over here, basically, the index is trading above the averages. Even on the weekly chart, the index is trading above all its important averages. And one important aspect was that 138.2% was broken on the upside. This is significant. That is because, when we think of an expanded flat, which is like an extremely bearish pattern in this case. So in expanded flat, what we expect is that this is one A, B, and this decline should come as wave C. Okay. For that, the condition is that 138.2 should not get surpassed on the upside. Now that it has got surpassed, so that bearish possibility is out of the case right now. Okay. The thing is that we might end up having some trouble if at all we break below the 20-week average, because over here what is happening is that the RMI is whipsawing over here, like it gave a sell signal. Now it has again given a buy signal above the zero line. When that happens, and basically, when we start getting something like this above the zero line, so that's where we have to switch to the 20-week average and keep trailing it till the time that doesn't break. Because that sort of tells you that we are in a strong uptrend right now. Okay, so that is the fact for the US index. So I don't want to spend much time over here, because we would be speaking a lot more today about RRG, and which since last 1 or 2 weeks I have been using, and it has really got me hooked there. So we'll discuss more about that. And see, broadly what is happening is that in the US, now there seems to be some slowing down in the data as well. But what market is probably looking out for is the CPI data for this month and probably next month, because that's when the Fed will make up its mind whether it wants to cut the rate, or it still wants to hold the rate at higher levels, right? And most likely like whatever I have read, it seems like inflation will cool off. I mean, CPI will cool off, and that might mean that Fed may end up cutting the rates as early as September, right? So that is what the expectation is. So we'll watch out for the data very carefully, how it plays out. I think this week or next week somewhere we will get CPI data. So that would be an interesting data point to watch out for. But broadly on price action, there is no much hiccups over there. The only thing which I find it a little surprising is that dollar index, that has inched higher, but that has not really been a spoil sport for the equities. So while commodities have corrected, and we'll discuss about it as well, but basically what has happened is that the weekly averages was not broken on the upside, and now the dollar index is rising higher. So over here, there is a chance that dollar index does end up making, say, W, X, Y, X, and Z kind of pattern, in which case maybe it rises till 108 or maybe a little above that. And this was something, in the very beginning we used to talk about this, where say it was something like this, where something of this sort of pattern, where the decline ended over here, and so this was a decline, and then this is W, X, Y, X, and Z, or you can say that A, B, C, D, E, and this is like an expanding pattern. I mean, you can say the running triangle pattern which it is forming. So if this is the case, then yes, there might be a risk of 108, dollar index probably moving towards those level. But at this point of time, at the best, what I may expect is that maybe till year, dollar index goes higher. So this ends up becoming WXYXZ. And from there, we end up getting a decline, because then it would mean that, say, this was one decline. Okay. And say you may want to call it A or W or whatever it is. And then this becomes 1, 2, 3, 4, and 5, something like this. So that is what the expectation would be. We'll see how things unfold, right? So on dollar index, maybe the previous high, which was at 106.5, that is what we might look out for in the near term. But that's about it. That is now one thing that is a little tricky is silver, because what it has done is that it has broken this channel on the downside. Okay, and now the pattern is not looking good. I mean, now we can say that a possibility up to the 20-week average may open up. The reason being that on the monthly chart, if you see this, everything is green candle, and here we may end up posting a negative close. So that would mean that this entire move might end up becoming one impulse, and we will see a retracement of that. Okay. So that's why, at least for now, we are on the back foot. See, there can be one more case, where maybe somewhere over here, silver bottoms out, and basically this becomes W, X, Y, X, and Z, and from here we pick up. Now the reason why I was thinking was because when we look at gold, okay, gold has, I mean, maybe I'm not sure of this pattern yet, because it is only today that gold is rising. So say, for example, by day end, if golds end up closing negative, then it may not be, wise to think of this idea, mainly because the daily RMI has only recently given a sell crossover, that too after completing a cycle. So in gold, basically, I was thinking that maybe what if, so this is the bullish case, okay, that this is A, this is B, this is C, this is D, and this is wave E of a triangular pattern, and from here only we pick up. Okay, but for that we would need more confirmations, like gold crossing above the averages, and even RMI giving us a bullish crossover. If all those things happen, then we may look at it. But or else, even for gold, what it may happen is that this becomes W, this becomes X, this becomes Y, this becomes X, and here we end up getting Z, right? So and also, if we see the 20-week average for gold, that is somewhere around 23,000. Sorry, that is at 22,600. 2,263, right? And so that is like 30, 40, 40, $50 below. So yeah, I mean, there can be some more correction over here in gold, if at all it breaks today's low. Okay. Or else there could be a chance of a triangle pattern, but judging triangular pattern at the start is extremely difficult. So we would need some more confirmations, like break of the trend line, RMI crossing, giving a bullish crossover, and so on. But that's how things are. I mean, gold and silver has been disappointing, because over here the signals didn't work, and that is probably because it is still in a corrective phase. So the longer term picture doesn't change. It's just that gold and silver is just trying to buy some more time, and we will need to be a little more patient. And I think maybe in this process, while gold and silver is consolidating or correcting, whatever we say, dollar index ends up making one more new high over here, and where this becomes WX, Y, X, and Z. Sorry, the move prior becomes WX, Y, X, and Z. And over here, we complete this entire pullback. And from here, when we start declining, that's when maybe gold and silver may also start, its next leg of up move. So that is what the expectation is right now. Let's see how things unfold.
Wonderful. That was very well explained, Jay. Thank you so much for that. Coming to what everyone is very curious about, the Nifty index has hit the 24,000 mark today. Is it time to book profit, Jay, or is there more steam left? Please tell us. Also, what are the sectors that are looking good based on the RRG? And what are the things to keep in mind when we look at the index through the lens of RRG?
Yeah, so actually Nifty index is honestly making a very good pattern now. I mean, I know that we have hit 24,000 mark, and people are like, there might be some missed out feeling as well, because this rally was very sharp. Okay, and that might have caught many of the people by surprise. But what has happened now is that there is an up move. There was a good consolidation that we saw, and now it is again inching higher. And more importantly, if we draw a trend line from the Jan highs, okay, so it is only very recently that it has broken out from this congestion. So that is a good sign, and that is telling us that probably Nifty is getting into a different range altogether. So that is what we are looking out for. But there are some catch in sentiment as well, so which we'll speak about that. But as of now, if I have to purely look at it from the price action point of view, this looks very strong. And basically, the consolidation that we saw for around 10-12 days, that was a healthy consolidation. And now probably it is looking like the Nifty index is ready to pick up. Now, in this case, what is happening is that we are seeing a lot of sector rotation. And honestly, I have been looking at RRG since last 1-2 weeks. And I kind of found it very fascinating to see how the sector rotation is happening. So wait, let me change the background to white color. So this is the light mode, and when we go to RRG and when we go to the indices. So when we look at RRG, it basically, there are 4 quadrants, okay? One is lagging, one is improving, one is leading, and then we have the weakening. So the way to look at it is that usually you will see the security, or any stock or index going from lagging to improving to leading to weakening, and then again, this cycle continues, right? So the point is that which are the sectors that you need to then focus on, correct? So sectors which are crossing from improving to leading, this is a good signal, right? Sectors which are going from weakening to lagging, this is also one good signal to watch out for. Okay, I will come to it, like what does it mean. But see, basically anything that is below 100, that is below this red line, it tells you that the momentum is being lost. Okay, and anything that is on the left hand side, okay, it is telling you that the relative strength is weaker than the benchmark index. So over here, we are taking the benchmark index as Nifty 50, right? So the moment if something comes over here or over here, it tells you that at least they are outperforming, which means that the relative strength is there in that particular index. In weakening, what may happen is that the momentum might be lost, but the index is still strong because it is still outperforming the benchmark index. Okay. And Julius also mentioned that the best patterns are when say the index is in leading, okay, and then it goes to weakening, and from there it turns around and again goes back to leading it. So that would be an indication that the stock was in an uptrend, and that's why it was leading. When it came to weakening, it means that it might have gone through a phase of correction. and from correction, when it again starts rising higher again. So that's where this ratio goes from weakening to again back to the leading. And that sort of tells you that now the stock is ready to, sort of outperform in the days and the weeks to come. So over here, see, we have the time frames. It is basically 60 minutes daily, weekly, and monthly. And over here as well, doing multi-time frame analysis works very well. So, because we are doing midweek, and, what we discuss about is say for few days to few weeks. So I think looking at weekly and daily makes sense. So, weekly will sort of tell you what are the sectors to watch out for. Okay, like where is it that we are seeing strength right now? So, all the indices like you see over here, I mean, small cap, then Nifty consumption, then consumer discretionary, MNC. So all the ones which are leading over here, these are actually strong ones. But when you see them going down, it means that the momentum is lost over there. So you need to be careful, because what it tells you is that it is outperforming. But now the pace of the outperformance is losing momentum, and you need to be careful, right? So, many other interesting things will be then to watch out for, okay, whether they are going from improving to leading or no. And here we can see that Nifty and Fin Nifty, okay, Bank Nifty and Nifty, Bank Nifty and Fin Nifty, sorry, these are the ones that are going into leading. So these are the ones that are interesting on a weekly time frame. Now, mind you, when there is a signal on weekly, it might tell you that, at least you can see 2 to 3 months of outperformance. Okay, that is the time frame. When you see on daily, okay, that's where it tells you that it is like, maybe you can say that 2 to 3 weeks kind of outperformance is what you can see, right? So now, whenever something is in the same quadrant in both the time frames, they become even more interesting. Okay, because now you can see over here that Bank Nifty is the one. Okay, so let me select Bank Nifty. Bank Nifty is the one which is outperforming, which has, turned into leading quadrant. Now, when I go to daily, you can see that over here it is already rising higher. So it is in leading and it is rising higher, which is telling you that the momentum is picking up as well as it is outperforming the Nifty index. So this is a good combination to have, right? Now, mind you, when you get these signals, it doesn't mean that it is a buy. It is only telling you that this sector particularly is very strong. We then have to come back to our original plan only, which is to look at the charts, look at the setups, look where the RMI is, look where the signals are, and that's where you need to concentrate. Okay, but this what RRG helps you to do is that, all this sector like you see over here, I mean, within one look, you can get to know which are the stocks or the index that are outperforming, which are the ones which are outlier. Like, say, for example, if we do the weekly, media clearly looks like an outlier, right? I mean, you can see over here that in fact, you can also go back and you can see. So you can see that from weakening, it has been inching higher and it had gone to improving. Okay. So now over here, when media comes to this point, okay, when it crosses over, this will be a good sign. See, right now, what it is telling you that strength aa raha hai isme, like, because like I told you, this line, basically anything above this means the momentum is picking up, and anything on the right hand side tells you that outperformance is there. Okay, so momentum plus outperformance is a very good combination to have, right? Look out for, and that way, RRG is extremely helpful. So you can see that many of the sectors like reality and all, which does look like doing well on the weekly chart, but when you look on the daily chart, they have been lagging and they have been weakening now. So what we do is that we look at the weekly chart and we understand what the higher time frame is telling us, and we try to execute it on a lower time frame. Okay. So like I mentioned, I mean, I was looking at it in the morning, and it was basically Nifty, Fin Nifty is what caught my eye because both are in the same quadrant. So then what we would want to concentrate is more on these sectors where we can find opportunity, because that's where right now the outperformance is, right? So this is how I think RRG becomes extremely helpful. And the ones which are basically in the lagging quadrant, these are the ones that can underperform in the near term. It is only when they start turning around and they go to improving, say leading, that is the time to be focusing on them. Because one thing, like I mentioned, okay, leading se jaake when we go to weakening, and then again when it turns to leading, that is a very good setup to have, because that is already telling you that the index has strength, because that's why the RS ratio is more than 100, which is relative strength is more than 100, right? Similarly, when you have a setup like this, when it is in red, that is lagging, and then it goes to improving, and then it again turns around and it goes down back, then it tells you, okay, I mean, just try to imagine that the setup might be something like this, that the stock or the index was declining, and in this pullback, basically this thing happened where it again tried to go to improving, because we were seeing an up move. But then when it starts its next leg of down move, then you will end up seeing it again curling back and going back to lagging, right? And that's where the stock or the index may end up making newer lows, or it might outperform the benchmark index significantly. So these are the setups, like I mentioned, to watch out for. If there is a crossing from one quadrant, I mean from improving to leading, or from weakening to lagging, and they are curling up from weakening to leading, or they are curling down from improving to lagging. Because improving to lagging means कि next leg of down move वापस चालू हो रहा है, and this would mean that next leg of up move is again starting. So yeah, I mean, when we look at the sectors, Nifty consumer, so this is not particularly looking good. I think this is Nifty India consumption. So that is not specifically looking good, because it is entering, into lagging zone. And yeah, in fact, Nifty, Bank Nifty, like I mentioned, and this is nothing but Nifty Private Bank. So all the banking and finance related seems to be looking good, especially in the near term.
Okay, wonderful. That was well explained, Jay. Thank you so much. Finally, please tell us, what are the sentiment indicators on strike telling us?
So yeah, I mean, this is now extremely important. That is because, now we have reached some sort of extreme, you can say. Because when we look at the FIIs, it has now come to that second line over here, right? And when we look at clients positioning at the same time, that has also, they have become net short. So typically when these sort of, you can say setups occur, okay, it typically means that we need to be careful of a correction. But see, I mean, these are few things I had explained in the webinar as well, and people need to keep in mind as well that these indicators give you warning. Okay, ultimately what you want is a price confirmation. तो जब तक मान लो कि निफ्टी इंडेक्स कोई इंपॉर्टेंट लेवल नहीं तोड़ता है, ओके, से मूविंग एवरेजेस और प्रीवियस लो और समथिंग, टिल देन द ट्रेंड इज बुलिश. Okay, because see, what happens is that if we are going to get this routine sort of correction which we have been getting so far, like over here it was 8 to 10%, over here it was 5 to 6%. So then you may end up seeing it going from one extreme to the other extreme, right? But if we are going to have a trending market like this, so what will happen is that it will come back towards the second line. Then there will be some minor corrections here and there, and that will lead to a cool off of position. And mind you, today also expiry ended. right? So tomorrow's data will be important to watch out for, like whether they have cut their long position, because what happens is that ye long position cut kar liya, okay, then from next expiry they will again start building position. So what will happen is that that covering may end up giving them space for to create further more long position. So that is why like I mentioned, I mean, these indicators sort of help you to understand that you don't have to go overboard at this point of time, okay, because looking at the past, these patterns are not so great buying opportunities, so to say. I mean, these are not the levels where you want to be all in. But in fact, if you are all in, then you will watch these signals very carefully, especially if there is a breakdown happening in your stocks or the index, right? So this is the watching out point, because the other thing is that when you look at the momentum swing, which is like a very near term indication that that it gives. So it was so happening that in this consolidation, basically this swing fell from almost around 90 levels to 20 levels. And it was only this day where actually index was higher, but the swing went down. And that was sort of telling you that the overall breadth of the market was not good. Okay. And it has only, and it only picked up yesterday. So in fact, today also the Nifty index was up, but this was down. It was telling you that today's breadth was not so good. Okay. But given that it has hit this 20 mark, maybe now it can again rise higher towards this 80-90 mark, and we may end up seeing the bullish momentum continuing in the days and the weeks to come. I mean, especially in the near term. So this is how we are thinking about it. So basically, the point is that the FI's positionings are reaching an extreme, but we need to wait how the positions end up being after the expiry. Okay. So after expiry, if they are still extremely long, then we need to be a little worried. And like I mentioned, I mean, if they are extremely long, wait for the price confirmation, which means that wait for the Nifty index to either break below the 20-day average or let it break below the 40-hour exponential average for you to take any action. But until then, the Nifty is in momentum right now. So you have to ride the momentum and try to capture the gain as much as possible, because we are in a momentum zone right now. So yeah, I think broadly that's about it from the sentiment, because I think it was FIIs and DIs positioning that was extremely important. But yeah, I mean, that's about it.
Wonderful. That was a very fruitful session, Jay. Thank you so much. Especially though, you have explained RRG. A lot of our viewers must be still trying to figure out how to think about the psychology when we use RRG. And there was a much more clarity on that. We will be having much more sessions in the future as well with the RRG, and certainly Jay is going to include this in our midweek sessions. So do catch up with us next week as well on Midweek with Indiacharts. For those of you all who haven't tried Strikers yet and are very eager to even learn more about RRG, I'm going to leave a link down on the description. You get a 7 days free trial. So yeah, just go for it and follow us on our social media, because that is where we put our daily insights and updates overall on the Indian market. And thank you very much for joining us, guys, for this session. I will be seeing you next week. We will be seeing you next week. Yeah, take care of yourself. Thank you so much, Jay. Take care of yourself.
Thank you.
Thanks. Bye-bye.